Namaskar. A happy 2022 to all our viewers. This is Sree Iyer, your host for Daily Global Insights, and I'm joined by my co-host Sridhar Chityala ji. This is episode 303, and we are going to take a look at how the markets performed in 2021 and what Sridhar ji thinks are the projections for this year. So, without further ado, let's welcome Sridhar ji. Namaskar, Sridhar ji, and Happy New Year to you, sir.
Namaskar and good morning, Happy New Year, good evening and good day. We look forward to a very exciting 2022 as we wrap up 2021. And we are now into the third year. We started DGI in 2020. We moved into
Yes.
2021 and now we are getting past into 2022. Thanks to everybody and everybody behind who makes this show possible. Thank you all and over to you, sir.
And a shout out to all our viewers to like this program and also to like, share, and subscribe to this channel so that we can grow and give you even more rich content. And today is the 1st of January, a new beginning as the Earth makes one more rotation around the sun. And here are the main points. The 2021 year ended with all three indices notching up gains. Sridharji, this is perhaps the continuation of what happened in 2020 after the dip, isn't it?
It is. It is a continuation. I think it's fair to point out that we have seen 3 years of sustained growth across the three indexes 2019, 2020, and 2021. And the trend has continued. We predicted 2021, my apologies, would be a bumper year coming on the back, recovering with the cash being induced via coordinated stimulus programs around the world, and the markets absorbing it and then reflecting in the sentiments and the performance in the markets. So that's what we have witnessed.
And the Standard & Poor's returned 25%, witnessing third successive year of the growth. And here we are going to put up a chart here. All 11 sectors grew in 2021, led by energy and real estate. Finance and tech also notched up gains. The chart, please.
Yeah. Well, I think, thank you, Shriji. The Dow was, though this is reflecting yesterday, which is the 31st close of business, there was a bit of tapering in the end as the markets went up in the morning, but by the time, with lack of volume, you saw that there was a dip across all the three indexes. But Dow finished 36,338, S&P 500 finished well past the projected 4700 number at 4766.18, and Nasdaq finishing at 15,644.97. So S&P clocked actually 27%, and this is the first time the S&P went past Nasdaq in the last 3 years, and it's almost since 2016. And as Shriji pointed out, that all 11 sectors performed exceptionally well. And 2021, the difference between 2021 and 2020 is, in 2021, it was on the back of earnings growth. Across the sector, there was a 40% earning growth, and that got translated into this stellar number of 27. It came close to beating an all-time record and even getting past the 29%, which we saw in 2017 or 2019. And that number, we came very close, and we had been predicting that this would be the year that all the three indexes would shine exceptionally well. And you can see from the chart that is put up, relatively we started at 3750 or 3743, and we moved all the way to 4,777. The initial projection was 4,400. Then the market was recalibrated, and we finished at 4,700 was the projection, and we finished at 4,777. That simply implies that this is not an isolated gain in one sector. The gain was felt across all the sectors, meaning that there was consistent contribution. This is notwithstanding the fact that we even had supply chain issues right through 2021.
And the Dow returned a stellar 18.73%. And the growth in the Dow was led by Home Depot, Microsoft, Goldman Sachs, United Healthcare, and Apple. Sridharji, again, Dow has also not been too far behind. So if you look at the three, Dow had the least amount of growth. Perhaps a lot of that was cooked in 2020, I think, because remember that COVID only affected those companies that were brick and mortar. In my understanding, I could be wrong about that. Online companies were thriving in 2020. Perhaps that's why the Dow did not do as well as the S&P. I could be wrong. Sir, your interpretation on how the Dow did.
I think your assessment is very correct. 2021, the growth in the Dow was driven by the traditional businesses. Home Depot, as you rightly pointed out, Home Depot is, your brick and mortar, but a combination of brick and mortar and online, but predominantly brick and mortar. United Healthcare, which is the health insurance and services business, Microsoft, which is a software services business, Goldman Sachs, which is the trading and investment banking business, that also witnessed growth. And then we also saw Apple, which is which is also in the Dow index, by broadly the performance coming on the back of not only its iPhones but other devices. So there's a whole swag. There's about 30 companies in the Dow index, and there was a consistent performance across. This is a very big number, and I think in 2020 we had about a 9% growth. In this year, we almost doubled. As you rightly said, pent up demand because of the shutdowns that occurred in 2020, and cash available at the with the businesses as well as with the individuals. Most important, the SMEs were given a stimulus through that big $500 billion infusion through a PPP program that translated into a tremendous outcome by virtue of purchases that happened and the services, the adjacent services that you see in things like health insurance, etc.
And then a look at Nasdaq reveals that the Nasdaq also rose by 21.4%. Moderna, Nvidia, Alphabet, Microsoft, Tesla were some of the big winners in the Nasdaq category, Sridharji.
Indeed, I think this particular chart which we are sharing gives you broadly the contributors. As you can see, Google contributed our Alphabet more than 66%, Microsoft contributed 51%. Amazon, surprisingly, was relatively less compared to 2020 when we saw stellar growth. The 2.8% is predominantly because a significant amount of logistical issues and supply issues that Amazon faced, and also they were one of the people impacted by COVID. The semiconductor industry performed very well. You can see Nvidia, growing around 126%. The Texas Instruments performing 15.3%, etc. You also saw the traditional software services business. Microsoft performed 51%, Facebook performed 24.5%. You also see the online plays like Netflix and so on demonstrating growth in the NASDAQ. But clearly the focus shifted from growth to value stocks in 2020. That is why you saw S&P outperforming NASDAQ for the first time.
Yes, indeed. And WTI crude finished at $75.45 a barrel, up a record 55.82%, highest gain since 2009. Brent finished at 77.94, up 50.39%. So oil, I think this is more a policy decision on part of the Democrats to stop drilling. Do you think that was a direct consequence of that?
Well, I would say that it's a significant contributor in terms we started the year around $45 a barrel. And then it's now finished at 75. There was even a prediction that the oil could hit $100, but we had been right through wherever we have covered markets in our DGI shows. We had targeted about $80, $80 to $85 prediction in the oil and Brent categories. We very much finished around the target, $75 for crude and 77.78 for the Brent. predominantly the dislocation in supplies and caused by, I would say, bad policies within the administration, but also the OPEC plus countries not yielding to Mr. Biden and saying, "Hey, increase the supply." They said, "No, we decide how we manage a supply, and United States is not going to kind of dictate our supply policies in terms of how we manage." So that is the reason why you had WTI finishing around 55.82% and the Brent finishing around 50%. Again, another stellar. If you had been an energy trader, you would have done reasonably well and be satisfied with the outcome without fearful of whether you need to worry about cryptos.
And 10 years down the road, the world will look back, or at least the United States will look back at what happened at the beginning few months of the Biden presidency, where they shot themselves on each foot by two really, really mind-blowing decisions. Not that it's not a good decision, but should have been done or handled better. One was allowing the illegal migrants to come in unchecked, which is now a direct cause of 800,000 deaths, I think, this year, and looking like it might cross 1 million soon. And this will be just the Biden term, of course. And also the fact that Biden administration abruptly stopped, drilling for getting the extracting oil from shale. And this is not just United States. They also shut off the pipeline that was getting shale oil from Canada. These two will probably stand out when history looks back at the United States and see where did the Democrats go wrong, because they somehow think that the public memory is short and that people will still go back and vote for them come November. I think they are in for a big surprise. Let's wait and see. The 10-year Treasury yields finished 1.51%, up 59.46% for the year. The Treasury yields, when they go up, what does it indicate, Sridharji, for the world?
Two things. It indicates, one, the inflationary pressure, which directly gets translated, and the short-term borrowing costs for people who are borrowing. I mean, 10-year is short-term, 30 years is long-term. So therefore, the short-term borrowing cost does escalate as a result of the 10 years, which puts pressure on the business. Remember, when the runaway inflation, there was a lot of speculation that the interest rate, 10-year yields, could go to 2%. Fortunately, with consistent statements coming from Dr. Jerome Powell as well as Dr. Janet Yellen, they were able to hold back the yield from getting past 1.73%. We were around 1.73 and getting into the 2% territory, and the yields pulled back. And they pulled back again. This is another decision that Biden administration will regret, which is this unwarranted stimulus and unwarranted expansion of the budget to actually fund austerity as well as social welfare programs. And there was tremendous pressure both from within Democrats as well as the Central Budget Office that there is a significant gap in terms of how it is going to be funded between what the Biden administration was thinking versus what the actual reality was, and how much of deficit that it would add by virtue of this uncontrolled expansion. And thanks to Mr. David Manchin, which resulted in the stalling, but I think they will come back in 2022 this year, of this Build Back Better America. It started, if you recall, around 3 trillion and made its way towards 2 trillion. It is currently stuck at 1.75 before Manchin rolled it out. So this is the reason why the Treasury Treasury yields pulled back, and to some extent sanity prevailed in the markets.
And let's now look at the digital currencies. Bitcoin for the year was up 60.25%, Ethereum 425.71%, and Dogecoin, this is kind of a little hard to pronounce. Dog ecoin, you can call it that too. It is up some 3,539%. Overall, a good year for the cryptocurrencies, We don't know how 2022 will look like, and perhaps Sridharji has already looked into the crystal ball and he has the answers. Sridharji.
Excellent, G. I wish I had the crystal ball. So I think that you remember that Bitcoin, my projection was 60,000. So I'm caught wrong. We finished way past. We did go to 65,000. It pulled back with significant amount of demand and cash coming in, and there was a shortage of supply. So the price tapered off because once people recognized that increasing the prices is not going to translate into sudden release of the coins in the market because there's no supply. That's one thing. Second, usually the tech sentiments, especially with inflationary pressures, typically flows into the cryptocurrencies. We witnessed that as well. The Ethereum went from about $1,000 to about it went up to 4,400 before it pulled back to 3,734. You will see that there is still tremendous growth left in the Ethereum relative to, let us say, Bitcoin. Then in the next chart, we will show some of the other broad segments. For example, Dogecoin, the XBR, etc., all kind of going up. At some astronomical from a low base. One of the important things that we want to point out is something called Solana, which is in the decentralized finance space. That went up 9,205% with significant amount of venture capital and private equity players coming into the market. We will do a separate session on what we call as the decentralized finance as it relates to cryptocurrencies. I know there is a lot of thinking around the markets, or even sentiments that people think, Bitcoin or cryptocurrencies are basically, creates anti-money, money laundering and other types of issues. They are like a gambling house. That may be the case, but what is being played out here, the cryptos are nothing but a pseudo currencies. But what the real game is, the reorchestration of the way the trade will happen, the way the transactions will occur, moving away from the traditional constructs of what we call as liquidity-based transactions to more token-based exchange of value when there is a trade finance, government to government transactions, government to business transactions, and business to government types of transactions. You will see the ecosystem being redrawn. We gave in one of our what you call offsite sessions, we talked about how you can contemplate from a simplistic illustration. It's a use case. Don't take it literally and figuratively. It's a use case of if you go into Las Vegas and you see how the casinos operate. It is a very well regulated market. There is no issue of money laundering. There's no issue of many of those things that people attribute to. It is regulated, and traditional currencies form the back of those chips that is bought and played in those venues, and you will begin to see something very similar. Why it is? Then it helps global trade and commerce to occur at a much lower cost, far more efficient, rather than being reliant on physical exchange of value and settlement processes, which are far more complex across different time boundaries. Then when you introduce the blockchain or the distributed ledger concept, then you will begin to see new market players dynamically entering the market into the game of trade and commerce. I think that's where this is going. And but the speculation as well as the regulation is much more focused around the pure currency as a commodity rather than the broad ecosystem.
And viewers, if you think that Sridharji and I should be doing exclusively crypto-based show like once a week, please let us know via your comments that yes, we would like to hear from you, because both of us are pretty strong in this. The only thing that we are looking for is your support, because getting into any sector and focusing on that takes a lot of effort and inputs and content checking and referencing and things like that. But we are willing to do it provided you say yes, and clearly that one requires a lot of effort, and that would be a members only program. That is, if you are a member, you can be at the smallest number, which is like I think $1 a month. But for $1 a month, you will get tough, edge of the seat and cutting edge information about where cryptos are headed, the technologies, and so on and so forth. I just need to know from you, yes, we would like to become member. If you are not a member, we'll become a member. And yes, we would like to hear from you on a weekly basis, like a 30 or a 40-minute segment where it's only cryptos. We're going to talk about cryptos and, of course, the technology below, which is the blockchain technology. In Sridharji's opinion and my opinion, in many technologists' opinion, that foundational technology is very, very good, can be put to use in many other sectors. Just wait and see how this plays out. So please do help us understand this market, and we will be happy to oblige. The next is US inflation. It was up 6.8%, the highest since 1982. Sridharji, in 1982, was it Jimmy Carter who was still the president?
Yes, he was. He was. Very similar policies. I mean, there's a comparison between Mr. Biden and Mr. Carter as to, how far they're going to. Global crisis, Iran-Contra scandal, economic catastrophe, blah, blah, blah. I think you can think of a very poor global leadership. It's, for the US leadership was at its nadir. And we are beginning to witness something similar as we finish 2021 and we step into 2022. We have problems in Russia. We have problems in China. We have problems in Ukraine. We have problems around the world aplenty. We have problems in Afghanistan. We have problems in Central Asia. All these issues remain simmering. And then you have the energy issues, energy crisis caused by the hiccups in the policies of this abnormal termination of existing contracts. Let's not forget the pipeline, the second pipeline that was running from Michigan going across to the other side. And then, of course, the Keystone, which was sanctioned and canceled. And then the additional drilling in existing licenses, with existing license, that was canceled. Then the new licenses was canceled. As one political commentator put it, if you study Africa, if you study Latin America, if you study Central Asia, and if you study some of those other nations, it is not the climate that is the problem. It is the lack of availability of the food today is the problem. And what you do, you bleed the sector that generates income with the hope that you will solve the future, but at the moment, forgetting the present. Do you believe that we are wrong? Please look at the flow of people that have stepped into United States, not just from Central America, but from various other parts of the world. Why? They did not come because there was oppressive regimes in those respective nations. They came because they needed economic upliftment so they can have a better living.
And viewers, there's some very interesting developments that came in my hangout with Elmer Yuan yesterday. 5 Middle Eastern countries. What happened to them? Please do go back and watch the episode yesterday. It's very significant. You don't want to miss this particular episode. And in global markets, the FTSE or the FTSE was up 14.3%. DAX was up 15.79%, and CAC was up 28.85%. Sridharji, I'm curious about the CAC's growth. It's faster than S&P, sir.
No, I think that the CAC growth was not faster than S&P. So if I'm right, yes, the CAC was about 28.85%. That's correct.
Yeah.
The French market, that's a French bourse. The French market had a tremendous amount of pent-up demand, and you saw that they were one of the the first markets within the Europe. They were insulated from the vagaries of the Germany, which suffered significant consequences because of the policies, the tailing policies of Angela Merkel. And then, of course, the FTSE felt the impact as a result of, Brexit exit, and the rebalancing of the markets that was taking place in Britain. So French bourses, received much of the the benefit flowing in, and hence they were up around the 28% plus. Usually, you will find that the France is when French also have the adjacent, Belgium and Liechtenstein. So they also, trade within the CAC bourses or the French bourses, the Paris bourse. That you find that those markets have had a reasonable fiscal policy as well as the consumer sentiments expressed, and that's reflected in the outcome that you see.
And India's BSE, the Bombay Stock Exchange, was up 21.99%. The Nifty 50 finished the year up 23.11% following the US market. Sridharji, is India more or less mirroring what is happening in the United States stock markets?
I think so. I think that you see, if you want to track Indian markets to some extent, to a great extent, you can probably look at the S&P and the Nasdaq, because India is tech-driven market space. So you see that whenever there is a spurt in the markets, and that naturally gets flown into the Indian market. This is my. I am not an expert on India, but I follow the correlation. One, you see a lot of cash coming into the system. Second, there is some kind of an intrinsic connection between the two democratic, one largest and one oldest economies, in terms of the interconnections between India acting as a great supply chain to the capabilities and the people resources of the US market. And whenever there is US demand, you see either technology or services that gets translated in some of the growth. Obviously, cash going in, we saw in 2021 close to $90 billion of FDI flew into Indian market. So with that type of liquidity, one of the highest liquidity, there's a natural kind of a stimulus to the market, and most of it came in the manufacturing, and the domestic services sector is still recovering. India's export sector also performed exceptionally well. We talked about this right through the DGI. It's expected to cross $400 billion of services manufacturing goods exports, or the goods exports for the fiscal year 21-22.
And a look at the Far East markets, the Nikkei was up 4.91%. The KOSPI, or the Korean index, was up 3.63%. The FTSE Straits Times Index, this is reflecting all the companies in Singapore, I think, the index was up 9.84%. The Hang Seng was down 15.13%. This is something very interesting. You would have to go back and look at my hangouts with Elmer Yuen on why the Chinese market was not doing that well. Sridharji, your thoughts on the southeastern markets?
Well, I think Japan is as expected. Japan had a long, tenuous issue with COVID. Mr. Suga was replaced by Mr. Kishido. So therefore, it took time, and that is why the sentiments ran. The market was only up around 4%, very much reflected in KOSPI, which is the Korean index, and that was also very modest in its growth, around 3.63%. As you said, Singapore Straight STI performed very well, relative to the Southeast Asian markets or the ASEAN markets. As far as the Hang Seng, I mean, everybody knows what happened to the, first and foremost, they killed democracy. Second, they punished many of those people, and many of them, the markets, both the tech as well as the financial sector listed in the Hang Seng, got walloped due to the policies of Mr. Xi Jinping. The Evergrande, the construction did not help the case as well, with people fearing, how deep the epidemic of potential default by that manufacturing, by the construction company, which is supposed to have very close proximity to CCP. All that was reflected. Whether this is a deliberate and provocative attempt by Xi to rein in and control capitalism remains seen. It's also believed that he may be using this as a bait, basically to force the companies who want to trade in China to be listed in Hang Seng and following the CCP rules, not the global market rules.
And to add up the last market, ASX was up 13.02%. Sridharji, this refers to the Australian markets, right?
The Australian market, yes, the Australian Stock Exchange, ASX market performed very well. It also follows, very similar pattern to the Singapore, and to some extent, it is correlated to both Europe and US, but more towards the US markets. So the Australian markets also came out of, to a great extent, came out of the COVID situation, and the market sentiments reflected the growth in the performance.
And now let's take a quick look in summarize the 2021 stock market performance for us, Sridharji, and then your predictions for 2022, sector-wise, if you can, but at least the 20,000 foot level on what's going to happen. Because I would probably add a few things of my own, basically my little observations here and there. But I yield the floor to you, sir. Take it away.
2021 markets were driven by only one factor: earnings growth. So the earnings growth was, how was the earnings growth driven? Two factors: liquidity and very favorable central bank policy of low interest rates. Notwithstanding the fact the inflation was around 6.8%, and the number is something similar around the world, the interest rates were held in check, basically to make sure that there was not pressing the foot on the brakes or relaxing the foot on the accelerator. So the interest rate policy was continued, as well as the stimulus programs continued until the last quarter, when they announced progressive tapering of the pullback of the asset purchases, but also confirmed to the markets that there will be interest rate hikes next year, 2 if not 3. And usually when Fed raises the rates, the markets react around the world. So what do we look at 2022? 2022 will be another good year, but it will not be a year like 2021. So we will again see growth across all the three sectors or the three indexes: the broad Dow, the broad or the deeper S&P, and of course the tech sector. In my view, the S&P will continue to outperform the tech sector. Why? Because there is a flow-on effect of lower interest rates prevalent going into 2022, much into 2022 till probably the last 2 quarters. So there is that benefit. There is also the benefits of the sentiments flowing on from the liquidity that is available in the system. Between third and fourth quarters, we reported there's close to about $2 trillion of cash still left in the system, in the banking system, that is held within the consumer accounts as a result of various programs that were introduced in 2021. So even without Build Back Better, tax credits, and other forms of direct benefit programs, there's still liquidity to support the economy, notwithstanding the inflation. So I expect a double-digit growth in S&P. I expect a double-digit growth, lower double-digit growth in the tech sector, and I expect probably a single-digit growth in the broader Dow index. Already we have forecast the US economy to be around 4% for 2022, and those sentiments will be going into the markets. We don't see any headwinds till 2023. As it relates to sectors, as we do a little more work around the sectors, we will probably share with you sometime in January which sectors we see much more prominence. Clearly, healthcare is one where we will see. The finance sector, as the interest rates climb up, that's another sector we will see. We will also see the semiconductor industry doing, again, very well. We expect the energy industry to do well, with much more price hikes expected, either in the Brent or the crude segment. So that's another sector that is expected. Materials sector will come back and do well. So these are 4 or 5 sectors at a high level, which we are sharing at this point of time. We'll give you much more detail, a little more detail, or 10,000 feet level information as we advance our journey into January 2022.
Thank you very much, Sridhar ji. And as always, it's a pleasure to bring you our markets update. We'll be back again with a markets update next Sunday. But during the week, we will have a news capsule where we kind of aggregate the happenings for the period that was from last Wednesday to coming Wednesday. You will have that. And we are also, like I said, waiting to hear from you whether you would like us to give you a crypto program. Thank you very much. Thanks for listening. Thanks for watching. Do like, share, and subscribe to our channel. And Sridharji, a pleasure listening to you over markets. I do want to just say that the markets, India might see probably a better growth than in US, just because that, China as a destination is going to go away, and that money will probably find its way to India, maybe to also Vietnam, but I think India should do very well. This is my prediction for 2022. That is after listening to Elmer Yuen. You have to listen, you have to watch this episode yesterday. So thanks once again. Namaskar.
Thank you. Namaskar. And as Sree Iyer pointed out, we make a lot of effort to bring both the global insights, the markets, and the other special programs like crypto to all of you. We require your patronage, your support. The programs require a lot of effort to bring forth from a number of people, not just 2 of us, to make things reach your homes. So we need your support. We need your patronage. Please continue to support so we can. We are also responsive to any suggestions that you may have. As Sree pointed out, you want a special session on cryptos, crypto ecosystem, not cryptos as a pure commodity. Then we are ready to be available to make that happen. Thank you and have a wonderful year.
Namaskar.